All right, today is September 3rd, Tuesday. So we got some 10 o'clock numbers coming out. Yesterday was a holiday, Labor Day. Shout out to the Pullman crew. Brothers protested, went on strike for better wages, better working conditions, sacrificed a lot to make yesterday a holiday. These vertical highs up here have been, yeah, displaced a bit. So Dixie's still moving up higher. Interesting. Still think it's a retracement. May have to go trade in. She may be around here. Maybe come up to this wick right here, this wick, somewhere in there. Um, in the grand scheme of things, stage one, stage two, stage one. I don't know, maybe stage two. Let's check out the weekly. One, two, three, four, five candle run. So that looks to be about right. I do like how Dow, or Nasdaq came down. Uh, we do have a breakaway gap right up here. So if we were to measure this out, 2253. Almost came down to it. Four is down here. So, remember, it's fair value here. So I'm bullish. I like to be bullish this week. With being that that's the case for me, we do have some constant encroachments on a weekly basis that we can take a look at. And lo and behold, Dow still moving up. So, we may get a touch here on Dow and then come down lower on index. I don't know, but we'll figure that all out. All we're looking for is about 75 points on a daily basis. So we'll label this as constant encroachment weekly. All right, daily, weekly. So we'll create a. So today is the day after the holiday, and we could put this in a new panel above. Oh, that's pretty cool. Wiseness giving me the option to. Oh, that's okay. Okay, I see what that is. Yeah, we'll just put them up there. Whoa, what is all? Nah, son, not doing it like that. Yeah, so as T says, days after holidays are usually best to not participate in. So we'll probably get some tape breeding in today. Anything we may put on the trade, if we can measure it out, do what we're supposed to do. If it makes sense, put the trade on. If not, just come back tomorrow. So that's what I'm looking at for the weekly. We do have this here, and I do believe that that low there on the weekly is. No, it's not. Maybe it's on this one. There we go. So we've got that there. When we do cross above here, then we'll look to answer in there, which, we're not too far from it. Maybe 2 days worth of price action away from it. So that's that. So yeah, bullish on a weekly, um, bullish on a daily. Retracing back into this here. And right now we're at 1 standard deviation of this breakaway gap on the weekly, which kind of lines up with the daily breakaway gap as well. So Energy 3.5. There's that. Um, so yeah, so we're looking. So I do have some measurements from the daily from last week. Oh, none of them are on here, I guess. So we're looking on a daily. Not sure why everything is so condensed. We can read that right now. 15-minute. I guess it's like the daily levels that we're looking at. That's what daily stands for. Right. So, okay. So that's cool. All right, let's go over to the 4 hour. All right, so we're looking on the 4 hour. Just makes it a little bit wider. I was looking at this like market one, stage two, boom, and we're still like consolidating within this range here. And here's the 4 hour with this daily. Like this, we can get rid of this. We can get rid of this. I believe this is like a volume imbalance. If you go back to the daily, yeah. So take that off, put that to set. Go to ICT. Put a note here. Whichever gap is the widest is the one that he wants to look for. So that's the one we're going to investigate. So 4 hour, got that there. So I guess this daily here. Let me keep that there. It's like the daily, you know, order of things. But turning on the 4 hour, this fib retracement. So usually so we're looking, okay. So here we were playing around with, this is our ranges. Sync that globally. And we'll just turn that on and off. I'm not ready to look at ranges right now. We'll take a look at that some other time. But this here, this is from the 4 hour. Not entirely sure why we have this here. I guess we're measuring this breakaway gap. So we can rename this breakaway gap. And then we have our measurements up here. 2.5. It kind of lines up with, these previous day highs up here. So, if we were to run up in there, we would need to take a look at entering into a discount. So our discount is our 4 up here. Our discount will be the immediate range, which would be from here to here. And here we have a volume imbalance at equilibrium, so daily equilibrium. So I do believe maybe at 10 o'clock we can dip down in here and possibly move up higher. So we do have these lows here that we can possibly test. Um, what is this about? Oh, this is actually what we're actually stuck in between this range here. So we've got this immediate range, then we have this range here that we're stuck within. So we're consolidating, and I like how deep discount of this range matches up with the equilibrium of this range here, as well as the constant encroachment of this volume imbalance. So, um, this is where I would be looking for an entry at this 19,420 area, possibly. And we do have constant encroachment of this 4 hour wick here. And then also down here at the low, this constant encroachment. So this volume imbalance is where my attention will be focused for a long position. 1, 2, 3. We could get four and like possibly five count on run, which means that all day today we'll just be bearish, going into a very deep discount, going for these lows here and these lows here. Um, so let me take a look at this. So we have this here. So this is 29th. So ST says keep 3 days worth on. Um, here's the 28th. I don't know why we have that as the 29th. Okay, so these are the Wednesday lows here. Well, this was Wednesday 28th low, and this is a 29th low here. So this actually needs to be moved up to here. All right, so that's 29th, and this is 28th. So it's 28th low here. Kind of confused as to why we have that there. So this is, oh, I see, this is 20. Okay, I see. This is 28th here. And so why is this 29? This is strange. Here's the 28th right here. This is at 6 p.m. Oh, okay. All right, so this here is the 29th low, despite it being happening on the 28th. So technically, this is the 29th. This here is 2 p.m. on August 29th. But given that the technically the day opens at 6 p.m., so I do like this as sell side liquidity. So I'm gonna mark this out as sell side liquidity. And I want to put him, well, first of all, I want to rename him. Put him there, and usually I will nest him in like here. So that's there. So looking at this breakaway gap, I like how we came almost all the way up here, then we have a smart money reversal. So that's cool. Turn him off. We'll keep him on, and I'm still digging these. Sync this globally. We'll put him here, and we'll rename him. Second, fib. Oh, major. So this is for our parent fib. And then ranges is cool here. And we have this guy here. So he's on the daily. So we'll just move him over here for our child. Right, so we have our parent here. We have a child here. And it's like how we're coming close to a very deep discount. Very deep discount. Almost had an immediate rebalance right here. You know, we had a run up manipulation, took that out July 30th by side liquidity and came down. So again, I would like to see price move a little bit lower into a discount. We may get like some manipulation at the bell, running up, only for us to come down. So and I do like these sell side liquidity points as well. Oy. So this is what I'm looking at. Although I want to set him here. go. Uh, yep. So move him up just a little bit higher. See that? See that? See that? All right. So that's where we're looking. All right. So we're cool here. This is in globally. That's in globally. This daily volume imbalance that's going to be in play today. Okay. So any like bearish order blocks, bullish order blocks that we can possibly project. We could take this one here, ranges. So 245 lines up nicely. 3345 lines up nicely here. So is this arbitrary? Possibly. We're only taking this bearish or bullish order block, bearish order block right here, projecting it down. We'll seek that globally and rename him. Right, so put him um, right here. Okay, I'll be back. All right, moving down to so that's the 4. Let's look at the 15. Just trying to stay true to the relationships. Time 1, 2, 3, 4, 5, 6. So this looks better than here. 1, 2, 3, 4, 5, 6. So that's also 6 as well. I was looking for like a market making models. This should be stage 1, stage 2. Barely got there, but see we left these Rotica lows on here. See that? I was looking at this too. I thought we were gonna attack it here, but we end up going way up here into there, which is also some new week opening gaps, as well as a previous session high before we just collapse and go all the way down. I don't think ICT is going to be on today, but I'll just keep an eye out. Anyways, so yeah, this price action from yesterday, I don't like it. It doesn't make any sense to me, but that's all good. All we have to do is look for, you know, where we are on the thing. So this is our breakaway gap, red one. So that really doesn't mean anything to me. That breakaway gap there, ranges as well. At this point, we did come down to this new day opening gap, which lines up nicely with this -3 standard deviation. So that looks good. Again, that's still theory. Still need to work on that. I don't have anything concrete just yet for that. All right, so what is this rectangle? I don't know what this is for. But here we have these sell side liquidities here. So all this is internal range liquidity. This may be a mitigation zone, like how we ran up into it right there. It came down, so it's just showing that we're still bearish on the lower time frame. So we want to be bearish on lower time frame to go down into a discount on the higher time frame, at which we will reload on contracts and move up higher. So this here, see this wick here? See how we come back down to this volume imbalance here? This is supposed to be set to set. See that? Boom. We just hit that. I think we're there right now actually. Yeah, we hit that this morning at 5:30. So anyways, this is accumulation at the high of a new day opening gap. So usually what we get with accumulation is some form of manipulation, which traditionally will be Two moves. First move will be taking out the initial liquidity. Then the next move will be taking out um, the real liquidity before it moves in the opposite direction. The opposite direction is the first move or the first pull of liquidity that the algorithm, I say, will want to take out. This also aligns with bots Pink Panther, although he does look at it within Q2 in the quarterly theory. So it's like this here. It's like, all right, first we take out sell side here, then we go down here, then we move. So basically, it's prices moving like this, kind of, kind of like creating a bearish breaker or bullish breaker. So we're taking out the highs, then the lows, so we're moving up higher. Market moves in three directions, so don't need to overcomplicate anything. But anyways, back to the 15. We do have Q2, 90-minute cycle here, and mean threshold of this right in between these two. Inefficiencies, when do they opening gaps? So I see this as we throwing OT on this. I'll go try entries here. So it's possible that we can manipulate all the way up here or to here. We move down lower, right? So let's rename this as right. So we'll sync that globally. Let's turn them on and off. Okay. So 15, I'm looking for potential. Um, Here we have New York, or that's London. London lows and what you call it, Asia lows have been taken out already. Here's Asia lows. London lows are not visible. Strange. What time is this? 3:30. I think London starts at 2, so this technically be like London lows right here. So I don't know. Not really concerned about that right now. New York open at 8:30. It's right here, so that's good. Midnight open is up here, so we're in a deep discount, deep discount right now. I do want to see us. We did tap this daily environment balance through the opening gap as well. We could look for a long position here, and then we didn't take these lows out here, and then we have you know optical trade and show this range here, which is what I was looking for. That's what this line here represents. Although it's kind of at equilibrium, I was looking at these lows down here, right? So here's optical trade and show this range. Boom, that lines up nicely. So if we look at the 4 hour, I do believe this is no, not the parent. Then we're looking at the child. Well, here's a child. Well, that's of this range here. So we have another range. Wow. Instead, this range is on the 15 time frame, and we hit right down optical trade entry. This range here, not entirely sure where optical trade entry is. Let's take a look at it. That wow. Ha. Yeah. So this is pretty powerful. So I would like to change my bias to being bullish right now, where we are right now. So that's what I'm thinking right now. Okay. Um, so put 15-minute here. In stage one, barely stage two, accumulation. See how we dip down here? Manipulation, then distribution. That's what I mean by like how the first move will target the first uh, Ivy strong liquidity, which taking out these lows here would have been better, but at the same time, we created like almost relative equal lows with three swing lows. Then we shoot up to a premium. Then we shot up to a premium, which we exceeded the optical trade entry of this initial range here and went up for these. That's not a thing. Optical trade entry will not prevail. One, two, three, four. If you have like new the opening gap or a previous candle's high right there. And then we got a reversal, came down there. So what we can do here is measure from here to here. And notice we come right down to 4, 4.5. So, and we do have a small little breakaway gap here. Not breakaway, but inverse fair value gap there. So, um, I like to be bullish. I like to think to be bullish. So we'll rename this to bear short block. How does this line up with our ranges? So the thing about this lining up with our ranges, which I don't have on here, which is fine. Well, here it is. See how this lines up to all that? All that's interesting. So we have to come back later today and take a look at that. That's from a previous day, anyways. Question is, can't this be a bearish short block as well? Good call. Um, very good call. And like how that all lines up there. So we have a lot of confluences. Um, I do want to see this thing here get tested. So question is, do we manipulate up first, only to come down to these lows here, as well as these other lows that we're looking at over there, here, right? And then move up higher, right? So this is from London. This is like right now. Um, put him here. This is, so I'll just rename him as 15-minute New York bear short block. See how you just ran up into this here. All right, let's look at the hourly. We got 3 minutes before the open. All right, 75 counter runs here. One, two, three, four, count of five. Then we consolidated, ran up. Look how this fair value gap here is respected to the T. This is on the hourly. Here's our 5 candle run. It was on the hourly. We get this strong move down here. We have a big, big, big fair value gap on the hourly. So I think we need to take a look at this. Rename. Should be. So I do believe price can run into there, which it already has. And if I'm not mistaken, okay, so here we have another range here, except this is on the hourly. We have from the side to this low here. And we're in a discount right now, so Oscar trade entry is right up there with this bull short block. Very interesting. So we'll just rename this 1 hour. So it's supposed to say bearish short block, but here, let's rename this. Right, so that's that, and then we also have I like to look at this one here, ranges, deep, deep, deep. That's if we say put on the hourly. So there's a lot of possibilities. Um, I don't know. That's that. And if we do run up higher for whatever reason, then we'll look to go short. Anyways, I'm doing better about getting up in the morning. Market's now open. So, finding our obvious next strong liquidity would be here, 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 you know, and then looking for that internal range liquidity also with our new day opening gaps, our projection points. All those are valid. All right, so right now what we have is a Jew. All right, so what we want to do now, go to regular trading hours, and this is our, so we open up right here to, that's where we closed up a little bit higher, right there, and we can take him off, and then we can add him as org and give him a title for today's date, submit the third, and then we can put him, rename him right there. So the 30th, the 29th, and that's it. Okay, so back to regular trading hours. So this is where we open up at. This is our 9:30. So anything beyond 9:30 is where we're looking to go. So notice how we came down to this, whatchamacallit, 5-minute balance. See accumulation, taking out these initial lows here. We may run up and then only to continue coming down lower. All right, so what is this about? All right, so near the opening gaps, put him there, and here's our orgs. See that flash? And everything else is our new day opening gap, right? Okay, so we'll close him out. This here, I mean, this might be a org from a different day. I'm gonna get rid of it. I'm not gonna have that on my chart. It'll be okay. But these are our orgs right now. And we have September 3rd, August 30th. Yeah. And then the 29th. He says only keep 3 of them on, so those will be the 3 that we'll keep on. I like how we came right down to the Lyman balance on the daily. So this is something that we need to pay attention to. And then we can throw him back on there. I'm not quite sure what this is. This is like from a day where we had not much of a whatchamacallit separation. So still moving lower. Like how we ran up here. Kind of came close to taking out those sides here, but here. See that? Boom. Not quite the 5 candle run on the 1 minute. Nonetheless, try to come into this 5 minute fair value gap here. So yeah, yeah, we just got to get up earlier in the morning, which we will, we will. So we do have a 5 minute change of state of delivery here. Could take this entire range here. But thought you take the last order block. 1.5. We can play around with this here. 3, 4 is at the low here, so I'm definitely looking to see if we can get a potential reversal there. So this could be our AM accumulation, manipulation, distribution AMD. So let's look how we are in the hourly. Now, does this make any sense to you? Flashing that on the hourly? No. So we'd have to come here. Notice how we come here. Stage one, run down. Still bearish on the hourly. See that? Optical trade entries here. That remains. This is the projection. 2.5 of this bearish order block here is right there. So that's where things are. And we can just no sync. Just have to remember we have to come back to take a look at it, which doesn't require much. It's just clicking over here to here. So, ooh, still moving pretty tight. Coming for these lows on here, which is a previous day low. And then we have this 4 hour low on here as well. So I'm not in any trades. Um, like I said earlier, I want us to go into a deeper discount. 1, 2, 3, 4, and we may again get a 5 candle run on the 4 hour, taking out these lows here, coming for this inefficiency down here. We do also have a volume imbalance on the 4 hour right in here. That'll be already inverse, so 2.5 of this bearish order block here is where we hit. Could get a smart money reversal. Let's throw on our. So at the low of this Q2, let's see how buyers respect this. We could answer in here, but we have not taken out these lows yet, so I want to see us first do that. So this here is on the 5. We don't need to sync this entire layout. Keep them there. See a small little inefficiency here. That might get inversed. The question is like, why would you enter in on a trade here, other than the fact that you're seeing the move, a potential inverse fair value gap? I would get in those positions a lot, just eager to get in the move and clicking the button. See, we came down to 4, almost these lows on here. And then we just have the huge dump down there. And looking at the 4 hour, here's the daily, coming to the volume imbalance. Right, so that's where we are right now. Other thing that we want to do is just wait for time. Time is like, it's like when you're supposed to enter into the trade, right? Right now, we just opened up. We have no fair value gaps, although we do have this one here. This is an extremely small fair value gap. Extremely small, and the bodies are respecting it. So what we may see, like, can you see that? I can't see that. I can't see that. Look at that. Look how small that thing is. Nah, I'm not keeping that on my chart. Keep that off. So yeah, I would jump in on this. Oh, take a move, take a move, take a move. Right? It's like wait 5 minutes. Wait. So we're doing better, slowly but surely. I want to see these lows get taken out though. All right. Then we could go on the 15-second investigate. This is consolidation. Nothing there for me. No five candle runs on the five. We do have like one, two, three, four, five. So possibly. Okay, so bodies are respecting this 4-point standard deviation. If you were to answer in on this trade here, this is 15 points. Can you stomach 15 points? We're at the low of this uh, environment balance. We have no 5-minute change in state of delivery. Just because, like, this is really good. Just because you can identify a PD array doesn't mean that it's meant to be taken. There's no 5-minute change in state of delivery. We have a higher time frame drawn liquidity here, as well as here, according to our 4 hour. A lot going on the 4 hour. So here's our 4 hour order block. Here's our 2.5 standard deviation retracement. So that looks good. 2.5 smart money reversal coming for that drawn liquidity. That's our breakaway gap. We can keep them off for now. And then we are within discount of the parent uh, fib. And then we have, which one? Oh, this is a child. So we're coming for the deep low to the child there. And then on the 15, we're not going to sync this globally. And then on the 15, we have this boom for coming for these lows there. And run up, cover these lows here. So see accumulation, run up, boom, take that out. Here we had that running tactical trade entry, bearish short of black right here. I like how you identified this bearish short of black right here. That's good. That's really, 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 really good. But we weren't on the 5 or a lower time frame to identify that, hey, we were moving into optical trade entry, fair value gap. See here? See this here? No, it's this here. See this here? So the fair value gap supported. Boom. Still moving down lower. All right, so here we are. Can't call this stage one, but we have a lot of open gaps here. So one could take this, project this down here, hit 2.5 perfectly right there. If we're looking to go long, since we are in a deep discount, we just have to sit on our hands a little bit longer. Maybe for another 5-minute cycle. So after this here, and we do have a Q3 quarterly shift approaching in 2 minutes, which will be the end of this 5-minute cycle. But I want 5 candles. I don't want 4, I want 5. See, this could all be accumulation, manipulation. All right, say we have a 1-minute change to delivery approaching. After we take out this drawn liquidity here, 32 seconds. Let's look at the 15. Small little fair value gaps approaching. I kind of like this for a position. So if we were to answer in here, this is a bit too much for me. 27 points. Small little fair value gap there. Wick here on the 5 forming. 50 seconds left. coming to this. What is this here? New day opening gap. No, this is our daily volume imbalance right here. So we have low, high, lower, low. Coming into a new 15. And then we do have 10 o'clock reversal in 15 minutes. Nice smooth OTE down here. All right, so we're in a new 15. And you have Q3. I like this, so I'm gonna take a position. So that didn't work. It does look like I'm out of 14 down here on a 15.
Potential immediate rebalance on the 5 here. There we go. So there wasn't any inverse Fourier gaps. There wasn't any breakers. There wasn't anything that gave us an indication that we should trade. So therefore, we don't take a position. There's our 10 o'clock. Right down to the new day opening gap. Really nothing going on. Again, no inverse Fourier gaps, no nothing. So this this year looks like catastrophe, right? So again, One, two, three, four. Here's our five. Probably coming down here. Get a reversal. Notice here we have, besides these lows, alpha trade entry, bear short block. Took one trade today, didn't work. We have vertical lows down here being formed. Just like how we came out to this new day opening gap. Q4. So what position? So we're in a discount here. We do have a fair value gap up here. Bear short block here. Uh, two, three, four, five. So we gotta wait parts out the new session to get a reversal. Where's our? Here it is. See, I was right about that as well. Question is, why didn't we just wait till we come down here? You know, it's like, no, that is out the trade entry. This is a 4 hour time liquidity. So as we just sit here and watch, it's like, what are we waiting for? There's there's really nothing happening right now. You know, there's nothing at all that is happening that would confidently get us into a trade. Here's first standard deviation of this. What is this? Is it this one? Or is it this one? I like this one. Right? There's really nothing here that can confidently tell us to get into a trade. Absolutely nothing. 1, 2, 3, 4, 5. All right, so I took a little scalp position. We're at 500 on the day. Um, I'm done for the day. I'm gonna. We could come back in the afternoon and take a look at what's going on, but yep, yep. So up 500. Come back tomorrow. I love you. Do it again. Um, and again, you have to respect the higher time frame order flow. Yes, daily, weekly, we're bullish, but we recognize that we needed to come down into a discount. See this? You caught this. See how we just went here? You caught that perfectly. That's good. Exceptional catch. You're looking for the PD arrays that are respecting other PD arrays. On the 4 hour, we really don't have much on the 4 hour other than this here, which the way this lines up, it's not as clean as what we have identified on the hourly. C4, see how these two line up nicely in a deep discount? So you're gonna see price come right down here and it's gonna do what it's supposed to do and then move in your favor and it's gonna give you all of the amount of points that you need to pass your combine. So we're still crossing the chasm between not getting too caught up in this 1 minute. Oh, just went to now it's no. This is what you call like a retracement, right? So we took a draw here, we retraced up here. Like yeah, this is higher time frame PD rate where we can expect price to go to, and it's like oh well, this low here is being respected, but where do you see that at? One, two, three, four, five. Here's your 5 candle run. One, two, three, four, five. And then we get a retracement. 5 candle run into a higher time frame PD array. That's what we have here. Here, drawing liquidity. Got that there. Look for 5 candle run into drawing liquidity or retracement. There we go. Here's your 5 candle run on the one, two, three, four, five into what do you call this? Higher time frame PD array. So if we look at this range here, from this low to this here is just 27 points. These are a lot of points. This is this low exactly. I don't know where you plan on getting in at on this. Like there's just really nothing here to convince me to get in on this trade. This is the 15. Hypothetically speaking, yeah, we took out these highs here. You got in here. There's 15 points right here. Here's your stop loss. And 25 points is here. It's not far. Here's a bear short block right here on the 15. So all in all, good job. Came in, did the right thing. Kind of got a little sideswiped by the 1 minute. You're looking for a long position up here. And again, we only take positions when we have a 5 candle run into a higher time frame draw liquidity. That's what this is here. So just remind yourself of this, meditate on this, reinforce this, and let that be where your attention flows to. And other than that, very good trading day today. Exceptional job. Stay calm, stay focused, and we'll continue to reinforce the effort today. So See how we just run up in here? See this 5 minute, and then we get a 5 minute chain instead of delivery. Five kind of run up, 5 minute chain instead of delivery. Run into this bear shoulder block here. Came down, boom, 4 hour, 5 minute run up to the lows. See that? See that? To the lows. Almost a 5 minute media rebalance. And then we open up with this candle, run up a little higher again. See this high, it's this low. And then looking at our stages. Stage one, stage two, here's stage three almost, where we are right now. No 15-minute 5 kind of run. One, two, three, four, kind of five on the five. But higher time frame prevails as always. So looking at what we have here is a better shot for us to look for position, especially allowing this 4 hour to complete. And then we have this hourly one, two, three. We're actually looking at this one here, one on the four. So, and again, one, two, three,